So what do you think about the gold mining stocks right now, and why maybe they're not performing in tandem with the price of gold?
Idiot management. The problem is the management of gold companies can't control their costs. I interview every gold CEO.
Yeah.
They come into the CBC or they come on the Langolier Exchange. I ask the same question to all of them. Look, give me one reason I should own your stock and not the gold you mine. Because I show them his chart, I show them the price of gold, and they are ugly. You'd rather own gold. Never own the miner, own the gold.
You think physical gold?
Yeah, well, here's what I do. I own physical gold for 50% of the position, so 2.5% weighting. And I use the GLDs, which are an American U.S. pay or U.S. currency, product. And then I, supposedly own the physical gold that way. But what I like about the GLD is I can trim my weighting every month. So when it gets over 5% weighted, I ping off a few GLDs or I buy in the GLDs.
Right.
Physical gold, I go hug at night.
Right.
I think the thesis that many people are bringing to me now is, why not switch out of gold and the GLDs and buy the miners? They've had the living you-know-what pounded out of them.
Yeah.
They're at the lowest valuations vis-a-vis the commodity itself.
Right.
And I say they're going to go lower.
Wow.
I really do, because there is no reason to own if you look at almost everyone except the royalty ones, their costs keep going up in every case. I say they're mismanaged. I say if a manager can't control his costs, fire him, get somebody else who can. Because if your cost of mining the actual ounce keeps going up, why would I ever buy the stock? What? Give me one reason.
There's no mining CEO you like right now?
Oh, I love them all. I just would never buy their stocks. They're great people.
Right.
But you tell me one reason I should own the common. Give me one reason. Dividends are practically nil across the sector. You have huge operational risks. You've got idiot management on the juniors. Not that they're bad people. I'm just saying the cold, hard truth about investing. If you want exposure to gold, buy the gold. Forget the miners.
But do you think part of the problem is there's too many juniors on the scene, for example?
Oh, it's just a wasteland. It's carnage out there. We had the PDAC conference here. They were rolling in like ants into the CBC to get interviewed. I talked to all of them until the story got to be the same. Like, it's the same story. Oh, woe is me. I can't raise any dough. My costs have gone too high. The mine is delayed 6 months. We're not in operations. After a while, it's just the same drone. It's boring. And I'm thinking to myself, these poor guys, their life must be hell. The definition of you're a bad person on earth is you go to hell and you run a gold mine.
Okay, Kevin, tell me, why do you like gold?
I like gold because, in a way, it's a stabilizer. It's an insurance policy. I listen to all the gold pundits, and they're always wrong as far as I'm concerned. It's impossible to time the moves. I've owned gold for decades, and I simply have a 5% weighting. I look at it quarterly. When it becomes more than 5%, I sell into the strength. And when it weakens, I buy into the weakness. It's just a stabilizer. I'm not one of those guys that's going to go to 40% weighting in gold. I don't believe the hyperinflation story. It hasn't happened. Gold is popular for a whole host of reasons. And 5% seems to be enough. It's worked for me in portfolio management. It's the only security I own that doesn't pay a dividend.
So, Kevin, I guess, do you not care if gold goes to $2,000 or $5,000 an ounce? You're still going to buy gold?
Yeah, I don't care. Like, let it run. I'll be selling into that strength, keeping it at 5% weighting. What I've learned, I'm an old crusty investor. When everybody's saying you got to own it, you should be selling it, because when it corrects, it doesn't touch the sides on the way down. So I simply say 5% is good for me. Some people like a 10, 15% weighting. I'm a 5% guy, and I'm disciplined about it. I hope it runs to 5,000. I don't care. I'll be selling all the way up, keeping it at 5%. And when it corrects back down to 2,000, I'll be buying it in. It's fun. That's the way you should work with gold. Never get so caught up that you take all your dividend-yielding securities that are also a hedge against inflation and put it into a commodity like gold.
Finally, a large portion of our audience interested in gold. I know in the past we spoke about the mining stocks, and I know you like companies that pay a dividend, but it seems that the mining industry is warming up more and more to the dividend notion.
Sure, because that's where the capital is going. More and more investors are thinking the way I do. They want return of capital. My problem with miners is this, and I've felt this way for decades. I have a 5% weighting in gold. I use the GLD and physical bullion, which I store. I pay for the storage. And the value of the commodity is whatever the market price is every day. I don't have to have a manager in the middle screwing up his capital cost allowance, not controlling his cost. I say to them, look, you do what you have to do to get it out of the ground. I'm not going to invest in that. When it arrives, I'll buy it. And that served me very, very well over time, because so many managers in the mining industry for the last 30 years have blown their brains out on cost. They are incredibly inefficient at mining the commodity.
And they've gotten better. We're seeing better management on the mining side. I guess investors who would choose the miners over gold would say, look, gold's not moving. It's almost like just having money there. Right. Whereas in the miners, it could be a really strong speculative play. You could really see your money.
But the history of miners is abysmal. Abysmal. The management is weak. They can't, I mean, they're constantly, you know, being optimistic about their costs, and they always, give me an example of a great management team that's been consistent.
Randgold, Mark Bristow.
Yeah, but you know, think about it this way. If I had bought the commodity 20 years ago, I'm probably better off than owning that stock.
Kevin O'Leary sticking to physical gold.
Yeah, I mean, you know, it's the only asset I have that doesn't pay a dividend, but I use it to hedge against inflation. It's had a nice move in the last few weeks. It's interesting as a buffer. I keep it at a 5% weighting. I use the GLD to keep liquidity quarter to quarter. And I like to bring the bricks out and throw them on the table and say to my kids, you'll never own this unless you get a job. It's terrific. It's fun to look at.